The beautiful thing about this market is it's highly underserved. As you can imagine, with companies of enterprise value of 2 to 20 million.
Okay, welcome to the Negotiation channel. My name is Sami Miettinen and I have my first English or American speaking friend, Gautam Basu.
Yes, sir.
Yes, and we met through our joint friend Marko Tamminen, who I worked together in London, and he moved to Finland, and he introduced me to you because of my negotiation skills. And you have a unique concept broadly called Search Fund, where you need negotiation skills. But initially, could you perhaps give a bit of a background of yourself? Why is a handsome American PhD working in Finland?
Yeah, sure. Well, first of all, thank you for having me here, Sami. So my name is Gautam Basu. I'm a bit of an international profile. Born in Germany to Indian parents. I hold a US passport and I live in Finland.
Okay, excellent.
So my background is basically in supply chain and operations management. I was a management consultant for 20 years, involved with performance improvement and transactions, M&A, deal environments. And basically after about 20 years, I decided to do something different and became an entrepreneur, investor, and operator. And basically that's why I'm here.
Exciting. So in Finland now you work as an executive in residence in Aalto University, and one of your recent areas is this Search Fund. So it's basically, I understand, a form of kind of private capital, and where you actually can get pretty good returns, but with a very unique twist, so you don't go like a private equity way. What's this Search Fund?
So basically it's entrepreneurship through acquisition, or ETA. So basically what it is in a nutshell is that for those of us that don't have a unicorn idea or a desire or motivation to start a business from scratch, entrepreneurship through acquisition provides a way for us to fulfill that ambition. And essentially what it is, it's an aspiring entrepreneur can search for, acquire, lead, operate, and grow an established business. So instead of starting a business from scratch, you essentially acquire an established business with established cash flow, revenue, customer base, and so on. So essentially the risk is a bit, let's say, lower, because as we know in the startup world, 9 out of 10 startups fail. It's tough, it's highly risky. And the returns are fairly good if you compare it with, let's say, venture capital, angel investing, or traditional private equity.
Yeah. How do, by the way, investors measure the returns? I guess the money back and IRRs.
Correct, IRR.
That kind of,
Exactly. So there's 3 ways to do it. The first way is you can start a search fund, which you basically raise capital through a selected pool of investors. They buy units, and you fund the runway of about 12 to 18 months to search and acquire a business. That's the first way. This way was pioneered by a gentleman named Irv Grossback from Stanford Business School. And the second way is a self-funded search, whereby the aspiring entrepreneur can fund the search and acquire phase by him or herself. And the third way is by partnering up and collaborating with an accelerator. And there you have, let's say, access to expertise, knowledge, as well as capital.
Yeah, and I understand you actually have a up and running concept for Accelerator, and it's True North Search.
Yes, it's True North Search. So we looked kind of at the market, and traditional ETA models have really kind of taken off in the US, where the actual genesis of the concept came from. Those are the, the elite MBA institutions, the Stanfords, the Harvards, the University of Chicago's, and so forth. I teach at the business school, but it's interesting because most business schools don't teach how to buy or sell businesses.
Yeah, definitely not in Finland.
Yeah, so we saw a gap in the kind of market, and this is a huge problem because the baby boomer generation is retiring. So I think the statistic is around 30% of Finnish entrepreneurs are age 55 years and over. So that means within the next 10 years they'll be retiring. So if they don't have a succession plan or son or daughter to succeed them, then those businesses will essentially go by the wayside. So I think the statistic was that in Europe there's something like 7 trillion euros worth of, let's say, value that could potentially be lost.
Yeah, and there was a statistic by the Finnish Entrepreneurship Association that there could be even up to 40,000 companies looking to have a new owners.
Yes.
So this is definitely needed. Perhaps a bit, so this has been tested USA with one set is that you take the elite Ivy League MBA and train him or her and put them in as a CEO.
Yes.
You fund it, they acquire a company and profit.
Yes.
But then you can also do in different ways. And yourself, you have tried this in the USA.
Yes. So we did an acquisition in the US. It's in the energy services business or sector. And it was successful. It was a bit of a turnaround. So it wasn't classical kind of ETA because the model basically says that you have to have steady cash flow, steady revenues. This was more of a turnaround situation.
Okay, but because of your operations background, you felt confident that you
That's
can
right.
do
So,
little tweaks.
Correct. Yeah. So if you come from an operations background, I mean, with this model, either way, you're going to have to roll up your sleeves and go down to the shop floor and do the nitty-gritty stuff. That's part of leadership. So if you're not scared or have the operations background, we also look at turnarounds. And the other part is like if you want to buy and build, you look for a platform company where you acquire the first company and then have bolt-on acquisitions on top of that.
But you don't need to be like a super bright MBA top of class guy to do this. It's actually helpful if you're down to earth, and this program kind of makes you go through a Jedi Academy where people like us teach them how to do it and how to buy companies and how to run them, and then they are much more confident. And if the business is not a turnaround or flashy growth story, then it actually is quite manageable for a lot of people.
Absolutely. I think you need some core skills. Those can be taught. What we do is when we look for candidates, we look for both hard and soft skills. So I think you have to have basic finance and accounting, know what a P&L is, what a balance sheet is, basic stuff that can be taught. But I think we also look at the soft skills. So leadership in a potentially transition environment. Grit, sisu, persistence, because during the course of the 12 or 18 months when you actually search for a company, it can be fairly difficult because you're going to have to reach out to them, and that entails cold calling, let's say strangers, and that's not easy. It's not, let's say, the most difficult thing, but you have to do it.
You have to. I guess you have to build rapport with the current owners because they're giving up their baby, and you have to show like leadership skills to them and also to the new guys in the acquired business, and then you probably actually need to physically go to that place, which is not necessarily in Helsinki region. So,
that's right. It's and that requires obviously negotiation skills and a motivated seller.
But I guess it's pretty flexible, so I could see somebody who's bright and ambitious and wants to get rich, but also in moderation perhaps, but also not take that much risk to have a startup on the tech side. And so you could actually have a pretty successful go, even if you like, let's say, late 20s, but definitely somebody like in the 40s. Experienced guy who's done line stuff, they could be quite a good candidate for this.
Absolutely. So, like I said, there's multiple different characteristics and attributes that we look for when we screen. We do psychometric testing as well to gauge the candidate. And everybody's got blind spots,
Sure,
right?
sure.
So, we look at the strengths of the candidates. Some folks can come from a finance background. Some folks can come from an operations background. Some folks can come from a sales, marketing, business development background. And that's their strength.
Sure.
But then where do they need kind of help? Can they develop? So I think this is a great journey to personally develop as well. And so we provide the training, and we try to get the person up to speed where they can actually lead and manage and grow a company.
But then you have a kind of this accelerator team behind you, and then once you make the investment, which is not a small commitment, you're actually taking a business risk and ownership risk, but then you have this fund who co-invests with you, and they have the same interest as you, and they want you to succeed and give you all the backup.
Absolutely, yes. It requires a full team, and it could be a lonely endeavor as well. So we offer that support in terms of the community.
Sure.
And I think it's a very interesting path for folks that, for example, are tired of their corporate grind. They want to do something different. So it offers a alternative mode of entrepreneurship as opposed to the traditional form where you have an idea, you build a prototype, you launch it, you scale it, you exit. It's alternative than that.
Yeah, and most of the businesses I guess people go for this, they already have an established cash flow, so you can just take it over and you don't need to worry about that, because entrepreneurship, when you start from scratch, often first year, even 2, you don't pay salary. So it's a lots of risk and personal hardship, but here you actually enter, in the best case, in the cash flow rich company who can pay you a decent compensation, and of course you have to pony up with equity money, but then you actually get the real job. It's not some flimsy flamsy startup stuff.
No, exactly. It's very tangible, and that's why we like this model. And I think growing a business from 0 to 1, 2 million is very different attributes than, say, taking a business that starts off at 2 million and growing it to 10 or 15 to 20. They're very different capabilities that are required.
Yeah. So this search phase, once you get the quality people in the cohort then you give them skills. So and then after the skills training phase, they start searching. So could you talk about those two things? What are the skills and how does the search work?
Yeah, so basically if you imagine a funnel, you can look for, well, first of all, you have to start off with kind of a search strategy and investment criteria. So typically in the market where we look at, it's anywhere between 2 to 20 million in revenue, with a 10% EBITDA if you want to go for a relatively healthy business. And then you have the, let's say, industry sector.
True.
And starting off from there, that is the basis for your, let's say, search. From there, if you imagine a funnel, you start off with maybe 300 to 500 targets, and then you narrow it down to 100, then 20, and then basically you tie them up with a letter of intent or LOI, and then you do diligence on that, and then you pick one. And then you negotiate.
You only need one.
You only need one, that's right.
And actually you can't have two because you need to commit.
That's right. So in essence, I mean, that's where the negotiation comes in as well, because you have to negotiate the purchase price. And the beautiful thing about this market is it's highly underserved. As you can imagine with companies of enterprise value of 2 to 20 million, it's a highly inefficient market, it's highly opaque. So the multiples are a lot more attractive as well. You're looking at anywhere between 3 to 5 multiple on EBITDA, for example.
Could be even deferred payments.
Exactly. And the way to finance, I mean, there's multiple different ways to finance. It could be traditional senior debt, could be some seller financing, and of course equity. So depending on the deal, depending on the structure, it really varies.
Yeah, and then I guess the fund side of things could be also flexible. You could have a a club of people who want to look at a certain sector and they're interested in developing that and maybe have passion for it. And, so they could form an ad hoc consortium who sponsors one entrepreneurs on that field, and you don't necessarily need a fund. So but then the more professional way could be you get commitments from investors and say, well, hey, if you get these investments which fill these criteria and you get the right guy, then they put the money in.
Exactly. Yeah. Exactly. It's really up to the individual candidate, the individual searcher. He or she must put in the legwork. We will support them along the way, but at the end they will be doing the work.
Sure. Yeah. Yeah, sounds pretty exciting, and this definitely has a sort of social benefits because we're helping the Finnish business environment to renew. But you're not only operating in Finland. This journal search is Northern European.
Yes, it's Northern European as a geographic scope, so it's all the Nordic countries, Finland, Denmark, Sweden, Norway.
Estonia as well.
Estonia, the Baltic countries. In fact, I spoke to somebody from Estonia today. And what's interesting about the former Soviet countries is that in the 90s when they were split from the Soviet Union, now a lot of those entrepreneurs are starting to retire. So they're facing the same demographic challenges as we are here in Finland. It's a huge opportunity. There's a huge need for this.
And you could even, to make this more complex, you could have a search teams in each country teaming up in the same industry and doing a fork-up transaction. And
absolutely. There's a lot of ways to skin the cat, as they say.
Of course, it gets pretty complex. So don't try to over-engineer it. I guess because the beauty of this concept is relatively simple and pure ingredients, so you get actually pretty good returns if you follow even the basic script.
Absolutely, and just to throw out some more statistics, it's simple, but it's not easy. So when we look at, for example, the U.S. data, 31% of searchers don't find a company within the 24-month period. Furthermore, 11% that do acquire, they don't create the optimal or maximum value creation post-transaction or post-acquisition. So we work with searchers and we work with the entrepreneurs through the whole cycle. So, after they acquire a company, there's the whole operate and grow, right? And so that's where you make the operational improvements or the revenue growth strategies that really get them to the next level. Yeah,
but still adding up those things, I guess the majority still make some kind of returns. So,
absolutely.
So you do get tangible human capital skills which actually translate into value, and at the minimum, even if you fail, you have that skill set and the experience.
Absolutely. It's a really nice model. It's a proven model. There are, like I said, some variations in the model, 3 variations, but it has been proven. So we're not doing anything new, but we're taking the model and we're implementing it in Northern Europe.
Yeah. I had to throw in a bad joke here. It's when a man with money meets a man with experience. The man with experience leaves with the money, and the man with money leaves with an experience.
Right.
So, it can also happen that you're actually exploiting the situation that because you bring a highly trained person to negotiate with the relatively sort of simple setup with a seller who is not sophisticated, you can actually make a great deal out of it. So.
Yeah, and that's typically the case. That's a great point because if you can imagine a lot of these folks that are retiring, this is their life's work, it's their legacy, and they've never been in a transaction or a deal environment. So obviously, we're at a bit of an advantage in the negotiation point, but again, what's the alternative?
Yeah, it's not exploiting because they could have to wind down the business. Yeah. Then you get liquidation value, and that's definitely very low.
That's right.
So and it has to a lot of people who have built these businesses. They want them to succeed, and they're their legacy. So they definitely don't want to run it down. And
absolutely, and it's a beautiful thing because. If there is not a succession plan, if there's not a son or daughter to take over the business, you have a relatively young entrepreneur who's ambitious. And typically what you see with these companies is that they haven't modernized.
Yeah.
So their website looks like it's from the 1990s. You know, there's a lot of, let's say, I like to use a American analogy, blocking and tackling. Here in Finland, we use a hockey analogy, which is skating and puck handling. It's very, very basic stuff.
Yeah.
And you can create value, a lot of value actually. Those of us that have done the model, you know, I like to say it's not even low-hanging fruit, but the fruit is on the ground.
Yeah, that's yeah, but definitely. I mean, but then the miracle is why this is not already happening. I guess it's hard, and it actually takes a bit of a commitment from everybody required, because you need to train the persons, and
correct.
Then you actually have to go to relatively small investments, so you don't, that this doesn't maybe scale into the hundreds of billions in Europe, or at least in Finland, it can stay maybe in tens of millions.
Yeah.
So the bigger funds don't necessarily want to do it, and but it has a kind of a social impact fund stamp on it. So I think this should definitely be because that's all the rage, impact investing. So this is definitely a very high beneficial impact investing. So
yeah, there's an impact to society, and you know, that whole, let's say, market. We're looking at the size, the enterprise value. It's underserved. So you know, anything under 20 million. You know, and what we see is private equity firms are moving further lower in the enterprise value. But again, when you talk to an entrepreneur who's selling their businesses, their life's work, do you want to sell to a private equity company to be put into a portfolio, or do you want a person there who cares about the employees, their business, their customers, and these are usually the softer attributes that a seller cares deeply about.
Yeah, and actually in the private equity, having done a lot of those deals myself, it's often the basic setup is for that the current owner actually will continue, at least initially, as the owner, and they will just reinvest their money.
Correct.
And then if you need to change the management, you do that later on, and that can be pretty ugly as well, because basically you kick the previous owner, CEO away.
Right.
But here you actually solve that problem immediately,
Yeah.
because the secondary sale is the problem. Private equity doesn't want to give a free lunch to some guy who just will go away and maybe have a competing business.
Correct.
But here you bring the management team, which is pretty much the CEO.
Right.
But actually, you can bring more than one guy. You can have two guys going.
You could have two guys, if you want to share the pie. There are quite a few instances where there'll be two people in a search team. That's quite common as well.
Yeah, and I guess with the search trainees, that you hopefully generate kind of comradeship, and they will help each other and naturally network. And
that's right, and you know, one of the things that we do at True North Search is we're building a community as well. So it can be quite lonely if you choose to do this alone. So we offer, you know, a community. Well-being is very important to us, so we have some performance psychologists working with us as well to make sure that, you know, folks are on the right track, that they don't you know, get burned out or what have you. So that's quite important for us as a value. Yeah,
and like mentioned, I'm happy to sort of help through you pro bono on this, on the negotiation, some valuation topics. So there's quite a lot of people who have a goodwill on this concept and really want this to work, and because we see the value of this. Awesome. This is good for everybody.
We appreciate that.
Yeah, but this sounds really great. I think you've been doing kind of a gradual roadshow on this. I was in one of your meetings in the before Christmas, and it was full house, and people were really interested. And now we'll try this up in, was it like the 6th of April?
I think the next one, it will be in the first week of April. Probably we'll give you, if you put this on YouTube, we'll put it on the show notes. I think it was April 7th at Aalto School of Business in Otaniemi. Brand new, beautiful campus, beautiful building. So welcome if you're interested in the concept and learning more about it. Cordially invited.
Yeah, so definitely, I think this sounds exciting, and this is kind of a primer on this. I think we might do a follow-up later on if this is of interest to people, and explaining how the concept works in detail. But really, I mean, look for this search fund concept through North. Maybe consider applying to the program, and definitely this. And if you have money to invest, and then this fund concept is calling for bright people to put it up.
Yes.
So I think this has been a great snapshot on this concept, and we'll see if I'll do more of English episodes on my channel.
Yeah.
Well, thank for you coming here in the channel.
Thank you, Sami.
And we'll see in a couple of weeks.
Thank you, sir.
Cheers.
Cheers.
Bye.